The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how are you doing today? The big news out right now. Google released their earnings early. Oops. Not quite sure why or what happened on that one yet. I'm sure we'll get the details as they roll on out. But what you do want to know is that they released early and they missed big. They missed so big that they actually had to halt trading on Google, and that is what is bringing down the market as a whole right now. If you're long, may want to reconsider that decision at the moment. And so I'm going to go ahead. I'm actually pulling up a thing right now just to show you sort of how this halt trading thing works. It's a great teaching moment, so I figure we'll go ahead and just talk about it. And we'll go in and just lay out the different numbers. So, all right. So anyways, what it is the SEC's rule for the circuit breakers. You can actually find over on the SEC website there. And basically what it tells you is they take the average price of the last 5 minutes, right there, the average price of the stock or the immediate preceding 5-minute period. And if there is a circuit break limit of 5, 10, 20%, and this is on a larger stock, on a smaller stock, it's a, whatever. We won't worry about that right now. It didn't apply. These bands will double during the opening and closing periods of the day. Well, we're not in the opening and closing. We're in the middle of the day. So 5, 10, or 20%. And if the stock's price does not naturally move back within the price bands within 15 seconds, there will be a 5-minute trading pause. So anyway, so there's new limit up-down rules, and they're implemented in 2 phases. The first phase will apply to the up-limit-down mechanism to all stocks in the S&P 500 and Russell 1000 and to select exchange-traded products. This first phase will commence on February 4th. The second phase will then move into other products as well. And so you can see all the details on that right there. But then again, that's the SEC's website, and you can check that out. I've already posted it over in the Tiger's Den if you're inside that right now. And but definitely something that you want to be aware of and how that works. Sort of look, so what was a 5% move? Well, let's check that out. Okay. So if I go right here, and I got a feed in right now, and we had a low, by the way, of 676. And if I zoom in on that, then the average price is basically $7.55, and you can see that right here. We basically got it at $7.55. Okay, most of the morning waiting on earnings to come out. And market doing a whole lot of nothing. And then just bam. Okay? So what happened on that? Well, this is a 5% move down. And this is a 10% move down. And it actually moved down to 676. So it actually moved down more than 10%. And so that's just an interesting thing. You don't see that happen often, and especially not on a company like Google. But we basically have moved down over 75, let's see, 75, 76, 7, 8. About $78. So just a massive move. So if we take that average right there, that minus pretty much where we had a low at, I think it was 676. I'll double check it, but yeah, 676. And then we go in on that average, and my Excel sheet keeps trying to get too big. Well, that's way too big. There we go. And so what's 755 minus 6? That's $79. So if we take that, and what was the price? Maybe doing this backwards. Yeah, thought it was. And average price. So that's basically a 10.4, basically 10.5% drop in Google in a matter of seconds. So you see Google flying down right there. Let's go ahead and let's move on over. Let's check out the NASDAQ. What happened to the NASDAQ at the same time? As Google goes, so goes NASDAQ, right? And you can see right here about 11:30. We go over here about 11:30. NASDAQ was already starting to pull back a little bit. Obviously, that drug down the NASDAQ and it's held it down there, and it's moving on down. And we can see right now we are not seeing anything come through on Google at all. So they're holding, trading there, and you can see it was trading, and they shut it down. So we go over and we can pull up the time it sells and look at Google as well, and sort of quiet right now. And we can even look at level 2. So a lot sitting there, but nothing is moving. So just checking all that out right now. You got orders sitting down. Look at this. I mean, you got people ready to get in and out of this thing all over the place right now. So, and the sizes are just minimal, obviously, because who knows where this thing's going to open back up at. And but yeah, they halt the circuit breakers there. So again, the price limit bands are 5, 10, and 20%. Well, it broke 10% or the lesser. Depends if it's a small stock or whatever. Additionally, these price bands will double during opening and closing periods. Like I said, that doesn't apply. And the stock price does not naturally move back within the price band within 15 minutes. There'll be a 5-minute, 5-minute trading pause. And I don't know, man. They may hold it longer. So looks like the last trade we got in there is 11.50. And so we're, obviously it did not move back within 15 minutes of that massive move down. And we're going to see, I guess, what they're going to do. But it moved really far, really fast, and very, very furious. So obviously that's going to create a lot of uncertainty. Where is it going to open next? Is it going to drop another 10%? Is it going to fly back up? Probably not. But what's going to happen next? So that creates a lot of uncertainty in the market. And you never know when something like this is going to happen. I mean, this wasn't even a scheduled announcement, okay? This was literally, it's supposed to come out after the bell. If we go over, and we go over just to say, let's go to Yahoo Finance, all right? So finance.yahoo, and we check out Google. And their earnings are coming up, but they prematurely announced their earnings release. And here's an article over on the Wall Street Journal, and you can see they go in. So, but this is just a horrible quote. And one of the biggest companies, and they had a 20% drop, it says, in quarterly income. So right now, this is happening so fast, I'm having to read the news on it right now. And 20% drop in quarterly income. And but it says, certainly not ones released by accident. You don't expect that to happen. So that's really, it should be coming post-close. And it didn't. If we go over to earnings.com, it's a great website. I like to use it. It's free. So that's another benefit. But you can go over here, and you can see just, what earnings are coming out. Go in and type in, Google. And, it's like, what's going on? Where is that? And you can see that's not there. And it's scheduled to, be coming out today. So we can go down here to Google. And Q3 earnings, and there it is. And it's like, wait a minute, why is that already out? So again, it was scheduled to come out after market close. You can see that right there, after market close on the 18th. I'm sure we'll hear some sort of investigation on that one. But you don't know when that stuff's going to happen. Okay, you don't know when the market's going to move so fast, and this ought to remind you, okay, sometimes we get a little complacent, remind you of 2008. All right, things just happen, and they happen quick sometimes, so quick that you can't even respond to them. I mean, if you're in Google right now, you are just, you don't know what to do. You're scared, you're nervous, you're like, where's it going to open next? Am I going to get wiped out? I just lost 10, 11%, And so you go over here, and you pull up Google. Let's see here, get out of my demo, get back into my live account on this thing. So let's see here. Where is it at? There we go. Yeah. Okay. And my live went up. And we can see what is going on. So right now, obviously not seeing any kind of big movement, but I'm sure this implied volatility is going to go through the roof. So on Google right now, we're going to see this. I mean, we thought it was big before, but you get a release like that, and that ought to make it just shoot, like it said, to the moon. And let's see here, and I go in, and I'm going to edit the study. I'm going to show you this and how this works, because this is helpful. It's a good learning opportunity. Anything, something like this happens, step back and go, how can I learn? What could I do? What could I have done differently? And or maybe, you can do anything different. Maybe it just happened, or maybe you weren't in, and you were fortunate, so you don't have to worry about it. But, so... anyways, look at this. I mean, you just see this right here. We're going to see this implied volatility is going to open back up here in a second. And when it does, we're going to see this thing just go, like, fly up. Implied volatility will definitely move. But keep your eye out on that one. And what are you going to do? How are you going to protect yourself whenever something like this happens? I mean, I don't care if you're trading futures or forex, whatever. Everything gets impacted when something like this happens. And the market was just sort of steady on, going on up. And... we were doing some trades this morning, looking at, hey, maybe it may do a reversal, looking at that, and some traders called that. That was a good call. I don't know if they called the Google thing quite, but they definitely called that move. And it just flew down. So how could you have traded this? Well, you go over, and what do we talk about? We talk about maximizing leverage, right? Right here on the Diagnostic Trading Hour, maximizing leverage, limiting risk, okay, and being one step ahead. Well, the maximize leverage and limit risk, that's Nadex. So go to TFNN.com, click on Nadex, go on to create an account, and you can open an account from start to funded in as little as 5 minutes with as little as $100. Are you going to put more in? Yeah, probably. But you can actually do trades with as little as $100 in there. You can trade for $10, $20, $50. And then for a demo account, just go down to the bottom here. You'll see demo account under our products. And it takes about 15 seconds. And you can sign up for a demo account and see exactly how this works. And you could have been trading the Dow on Nadex this morning. You could have traded binaries. You could have traded spreads. So there's a lot of different ways you could have traded the Dow. But, you could have traded, you could have traded diamonds, right? You could have traded Dow futures. You could have been trading the Dow index options. You could be trading Nadex binaries and spreads. So, well, Nadex binaries and spreads get the advantage of very little capital outlay required, huge leverage, very little premium because they're all like 1 day or less. Well, I guess you can go up to 5 days on spreads, but 5 days down to 2 hours on expiration from opening. So there's very little premium built into them. And you get just a huge leverage. If you want to trade like you trade in the market, you trade the actual, spreads. If you want to trade a little bit different style of trading, like certain strike levels, support resistance, swing trading, reversals, gap fill plays. So, I was looking at all the gap fills this morning, and I've had a great gap fill set up, and we went in and boom, 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 across the board on the indices. And you can trade those on Nadex with the binaries or the spreads. So now the gap has to be pretty big to do the spreads. So usually you're probably going to be looking at the binaries on the spreads themselves, but the binaries on the gap fill trades. But this is just a great example to show you, whenever something like this happens, it's a new era. And I mean, when flash crashes happen and countries go bankrupt and Google drops 10% in minutes, you cannot be too safe, okay? And like I said, I've said a lot of times in other times, I feel naked if I'm not trading Nadex. So, because you need that hedge, you need that risk protection, you need that, it's not going to kill me. And, maybe you were in the Dow this morning, okay? And maybe you got in near the top. None of us have ever done that before. And so you go in here, and you're like, man, this thing's going, this thing's moving, and you go in and you buy. And then all of a sudden, just, bam, what happened? And, 10 minutes later, you figure out, oh, wow, Google, sort of messed up. And, but you know what? You can't lose anymore, and you have time to be right. Now, chances of this thing coming back, I think, are pretty slim. But, who knows? We've seen some weird things. We saw that massive crash on the flash crash and the 50% retracement. So, it may pop back up there. We'll see. But, right now, you need to have risk management in a whole new way for a whole new era in trading. And this is the perfect example of why you need that. Stay there, folks. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Alrighty, folks, welcome on back here to the Diagnostic Trading Hour. And we have had just an interesting little morning right here, right before the open up. We were like, wow, or open of the show here. And we were going in and looking at several things, and one of the things was, Google obviously having this big mishap, and there's different ways to trade that you could hop over and trade on the Wall Street 30. So we can have the scanner right here on the Wall Street 30 right now, looking at, what trades do exist, and maybe you want to trade it through to the end of the day. So, or just different trades that you could actually do on the entire market. So we'll check those out. We'll look at them, see if anything lines up for what we're looking for. And we got a lot of volatility built in right now, and but we do have some definitely low risk trades also that we can check out and that we can look at. So looking at the Dow right now and where it's at, we also, one of the things we always like to do right here is we like to make sure we pull up the deviation levels. And on the deviation levels for today, we can see what were the levels for the Dow. The levels for the Dow we can see right here are, looking at the mini Dow Industrial Average, 13,550. Didn't quite get up to that. And but what about on the downside? Let's see, we moved down to about 13,470, and not a massive move down really, because that's just basically closed everything else. Let's put it right there. So no big moves really on the Dow, except for just that massive drop that happened quickly and unexpectedly. But we also had when the reports came out this morning on the news, stuff came out as well that moved the markets quite a bit. So you can look at it, you can just sort of decide what you want to do. You could straddle it from here. You go, you know what, whenever that opens back up, then what do I think will happen, right? Because you could trade based on just simply thinking, hey, Google's going to open back up, and then this is how it's going to turn out. So you could straddle it. You could go long. You could go short. You could say, you know what? Well, that's horrible, and if they had to halt it, it's just going to get worse and worse and worse. It's not going to get any better. So therefore, what I think we should do is go ahead and go short the Dow. So if that's your opinion, you want to go short the Dow, how could you trade it? There's different ways that you can trade it. But one way is go here and just look at selling, okay? And you can see these trades right here that are available for you to trade. And I'm keeping an eye over there on Google as well. But you can go in and go, you know what, probably in the end of the day, this thing's going to pull back. And so I have a trader here I can do. That gives me, though, just 33 minutes. And I want more time than 33 minutes. So I can get rid of the 33 minutes by using the scanner. I just go in here and just say, you know what, give me an hour at least. Well, now I have 93 minutes and I have 168 minutes. So I have ones that expire at 3 o'clock Eastern time and ones that expire at 4:15. And I go, okay, well, out of all those, is there something, there's really no big advantage. I can see it all. Between these right here, $16, $18 risk. Down here we got $16, $18 risk. 14 to 16 points movement required on break even. That's not a big deal on the Dow. And but look at the reward, $278 versus $78. $376 versus, so basically 78, 276, and 376, and you're literally talking about the exact same risk. So basically $19 on one and $21 on the other two, and these two right here. Okay, so we'll narrow it down. We'll look at the sell side. Let's bring it in, zoom it in on there for you. Okay, so we got 3 different possible spreads we're looking at for if we want to short on the Dow. And check this out. I mean, this is huge. This is where the scanner's going to come into play. We're going to be releasing this anytime now. But 92 minutes, 167 minutes, 167 minutes. So obviously these have more minutes. That gives them a clear advantage. As far as break-even distance, you're only talking 2 more ticks on the Dow. So that 2 ticks is not anything to worry about. $2, again, not anything to worry about. So you have more time and basically the same risk and the same move to break even required. So all 3 of these are on equal distance, except for these have more time. But now let's look at here's the most important thing about the scanner, I think. Because when you find out, okay, these are all equal, and you're trying to figure out where to go next and what to do, the next thing is your reward. Look at this. I can only make $79 on this one. If I chose that trade, then I'd be giving up a potential almost $300 in profit potential on a trade. And for what? To save $1 or $2 on risk. $300 to save $1 or $2. So just one trade using the scanner literally could, just $200-$300 right there. One trade. One contract, one trade, by the way. A $20 risk trade. We're not talking about hundreds of dollars. We're not talking about hundreds of trades. One trade, $20, and that's how much the scanner helps you. You go on down, you look a little bit lower, okay? 276, 370. That's a $100 profit potential. Yeah, do I think the Dow's going to go down to 13.1? Well, no, but I also didn't think that Google was going to drop 10 or 11%. So, and why in the world, here's a pop quiz for you, right? Why in the world would I choose this spread over this spread? This spread, 165 minutes to expiration. This spread, 165 minutes to expiration. This spread, 15 ticks to break even. This spread, 15 ticks to break even. This spread, $20 risk. This spread, $20 risk. This makes 276. This makes 376. So you need to make sure you're looking at all the spreads, and that's where the scanner comes in. It helps you find easily the best spreads with the greatest risk-reward ratio. We'll be right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here. I am your host, Darrell Martin. If you have any questions, feel free to give me a call. You can call me at 877-927-6648. Just to wrap up that possible Dow short trade, if you're looking at that. You can get in on that Dow trade. Of course, the one to choose if you're going to go short would be the 400-point wide, 415 expiration. That's going to be your daily tiered spread, okay? And if you're looking over in the Nadex platform, you'll be able to see that one there. And you'd want to get into that trade, and you go in and you hit the sell button. And so anyways, but you go in, and I'll show you that here inside of Nadex itself, so you can see that. And we got, let's see here, we got Nadex, there we go. And so if we zoom out a little bit first, then I'll zoom back in, we hit refresh, we'll zoom back in, go over to indices, bull spreads, we go down to Wall Street 30. Again, great trade to do just to test things out in your demo platform that you may want to go long too, so you can go either direction here, of course. But just showing you an example, if you wanted to go short. And so you go over here and you got that daily 400. And then looking, again, click on daily 400 to make it show up. You click on plus, you're going to be like, why isn't it showing up? And, click on the word daily or the time itself, okay? Don't click here, click here, right here. So right there, right next to the minus and plus sign, right next to that is what you're going to click on, okay? And so anyway, so we got that up, and we're looking at all these spreads. we narrowed it down basically to this one spread right here. And check that out again. That's the 13.1 to 13.5 spread. And so we go on. You can pull it up, and you'll actually see the risk and reward on just one of the contracts. And so one contract, $21, $379 potential risk. Do I expect to make that much? No, I don't expect to make that much. I don't expect it to fall that far. But why, again, and let's show you this. Okay, I'll just show you side by side if you're looking on just the Nadex platform. Look at these two spreads right here. It's weird, never shut that down. All right, details. And click on both of these. Look at it. Exact same risk, $100 more profit, exact same expiration time. So now why is this wider? It's wider because it actually started earlier. These started last night. The dailies started in the evening of the previous day, okay? These started this morning, 7 a.m. Eastern time here, okay? So the shorter time there is to expiration, the narrower it'll be. But these just happen to have the exact same ceiling, and so therefore there is literally no reason at all to go in and trade the narrower one when you can get the wider one with more profit potential. And who knows? I mean, the market may rally at the end. The market may just crash at the end. But that gives you a really low-risk trade. If you do 5 contracts, that's like doing one contract on that. And we actually, I think we have that built in over here. Yeah. So 5 spreads to 1 Dow future. So if you sold 5, you'd be like selling 1 Dow, but only having $100 risk. Okay, that's only like having a 2-point stop loss. And I don't know about you, but I'd be pretty uncomfortable with having a full, well, not 2-point, but $100 is obviously a very, very small stop loss. So it'd be a very, very small stop loss, but like 2 points on the S&P. And I would not want to have that kind of stop loss if I was, trading, normally. That'd be just too tight for me on a day like today, where I expect the market to move down, pretty dramatically. So, so we got that. Looks like we got a tick on Google. So we got 1 tick. Let's see here. So they let an order through. I only see order 100 shares in the time and sell so far. This sort of fun. I know our show's a little bit, we do a little bit different show, but when you see something like this, why not do it, man? This is interesting and fun and everything in between. Yeah, see, 100 shares ticked through at 12:35. I don't even know how that thing snuck through, but it did sneak through. And so it's quiet. We'll see if they continue or if they just decided to shut it down as soon as that. They may just shut it down as soon as they take order. They may open it up and re-shut it down like a limit lock. But the Dow, as soon as that happened, did decide to go ahead and drop as well. So it didn't show like some big up move happening. And no volume, of course, on that 1 tick trade. Anyway, so we'll see how that proceeds and continues. Let's go ahead and do a market wrap on the market as a whole right now. And on the market as a whole, looking at where everything is sitting, and we like to do this for you every day. We usually do it at the beginning, but right now we're doing it right around the middle of the day. We got the S&P is now down 4 points. We got the NASDAQ down 33. We got the Russell down 3.8. And we got the Dow is actually still up a couple points, believe it or not, despite everything. So we're going to see how that one ends up. And then we got copper is down 0.075. That's not much of a move at all on copper. We got silver is down 0.312. That's actually a 0.94%, almost a 1% move. And we got gold is down 8 points. That's about a 0.5% move on gold. And this is from previous day's close. And corn is moving and shaking today. It is up 15 points right now, 2%. Soybeans also moving and shaking, up 34 points on the day. That's 2.2% move in soybeans. So, of course, Google beating all in with its 10% move. We got oil. It is down just 11 cents on the day, barely moving compared to yesterday's close. We got natural gas. It is actually down almost up. Sorry, not down. Up. Natural gas is almost up 3%. So on the day, it is just flying. Looking over at our currency side of things, we got the euro dollar down 26 pips. We got the pound dollar currently flat. We got the Aussie dollar down 6 pips. And again, flat being unchanged. So meaning it's where it was closed yesterday. And we got the U.S. yen that was on the pound dollar. On U.S. yen, we got the U.S. yen up 20 pips. We got the U.S. franc up 10. And we got the U.S. Canadian up 38 pips on the day. So that's our quick market summary wrap, and we already talked about one of the fundamentals of the day, and of course that was earnings announcement by Google. And other fundamentals of the day, let's go ahead and check that out, see what's happened this morning on the government news announcement front. We had a Spanish 10-year bond auction that did happen last night that actually came in good. So that was a positive thing for the market. It came in at 5.46 versus, the previous time they came in at, 6.65, and they revised that 5.67. So, they've actually, their yields are dropping. So that's a positive sign for the market as a whole, and hence, we see some, up move there. But, nothing, I guess, stellar. We can also look at euro dollar. We can check that out and to sort of see, how did it respond to the Spanish bond auction right there. And euro dollar didn't, it was very volatile. You can see this up and down, all night, 40 pip swings going on. So very, you better be trading Nadex if you're trading that, because I don't know where you're going to buy and sell on this thing unless you're if you're doing swing trading, that might be a strategy. But Nadex is great because you don't have to worry about these spikes, and you can play it buy sell. You can do binaries, you can do spreads, etc. So, anyways, we got that on Spanish bond auctions. On the pound, we had retail sells come out. So we go ahead and check out the pound real quick. So we got a pound and pulling that one on up. How did it like that number? What came in better than expected? It came out at 3:30 Central Time, 4:30 Eastern Time. And you can see when that number was released, the market jumped for joy and it flew up, but it gave it all back. And so a lot of people hopping over to the dollar right now, getting a little bit nervous, I guess, because of Google. And like a lot. And so anyway, so that retail sales there. EU Economic Summit, of course, is in full swing and play right now. They launched out today, of course, main topics being about Greece and Spain, and apparently France and Germany are fighting. So they're not war fighting, but they're disagreeing pretty heavily. So and they're trying to decide on should there be this one monetary unit that could loan money to banks and try to get rid of the vicious cycle of all the bailouts and governments helping banks and all this other stuff. And so, anyways, they're calling it a big tussy. That's what Bloomberg called it. All right, so not my word. So tussle. Oh, that's better. Okay, yeah. It's like tussy, really. EU tussle over cost threatens to derail the bank union plan. So anyway, so that's a story right there on Bloomberg. I'll post that link for you in the Tiger's Den. If you're over there right now, you can check that one out. And anyways, we got that going on. And what else do we have going on our fundamental side of things? So we had that happen last night. We move on over, of course, this morning. We all know, as we have each and every Thursday, we had our unemployment claims. Unemployment claims came out, and they came out worse than expected. And right, you can see right there, 7:30, boom, market didn't like it, dropped down. Then the market decided to go ahead and pull back and fill in the gaps pretty much across the board from the previous day. And then we had Philly Fed Manufacturing Index. So that came in much better than expected. Came in at 9 a.m. And you can see right here when that came in, sort of had a spike up and a spike down. Come on, really? You got to have spikes like this? Well, if those 4-point spikes are killing you, trade Nadex, you don't have to worry about the spikes. And then it moves on back up in the direction of the news, which is nice. So if that came out and you bought in the direction of the news, and it spiked against you, you're still in it, moves back up, and you can take your profit at your profit target zones, such as the deviation levels, or support resistance, however you're laying things out on your screen. So, and then we move on over, and we had natural gas. So natural gas, wild and crazy swings. There's some messed up stuff. I was reading an article in the Wall Street Journal the other day. Some messed up stuff going over on natural gas. Just these fire-off algorithms happening, and you got to be careful when you're trading it. And natural gas came in, and it actually came in higher than expectations on the inventory report. It came in at $51 billion. They expected $46 billion. Now, we do expect prices to drop when that happens because that means more inventory. But it went up. And so you can go in, of course, there's more details to the report than simply the number. But the gas storage went up. And so it did what it's supposed to do. It dropped, but then it rose. And that didn't make sense. But that's why you go in and you have price target levels and you shoot for those and knock that out. But we did have natural gas storage, and again, it rose $51 billion. Now, the one thing is it did go up, but it was lower, and this is important. Always look at the last number. It was lower than last time. Okay? Meaning last time it came in at 72 billion British thermal units. Now it's at 51 billion British thermal units. And so, it's higher than expectation, but still dropping. Okay? Meaning the storage bins are still going down. So therefore, that would lead to an up number. So don't just look at, is it better than forecasted, worse than forecasted? always look at, when you're looking at the reporting of the numbers, how did it come in compared to the previous number, and did they revise any previous number? So there's like 3 things you're looking at right there, okay? Better or worse than forecasted, all right? Better or worse than previous number, and did they revise previous numbers up or down? So those are the 3 things you really have to look at the same time whenever there's news reports come out when you're making your decision. And so seeing that it came in a lot lower than it's been since back in September, that could be an expectation that natural gas would rise. Now, one of the things you do, you could always straddle this report right before it, and that's a fun play to do. And you can go and you can straddle with binaries or spreads. Obviously, natural gas is a less liquid market. Be aware of that. But, you want to get in there early if you're going to get in. And, again, be very careful if you're trying to get on the futures because they can just knock you out quick. Now, we also have some other reports coming up tomorrow. Tomorrow, we got the EU Economic Summit is going to continue to rise. Of course, we got earnings still pouring in. And we also have a couple other things. The public sector net borrowing is coming out of Britain, and that's going to come out at 3:30 a.m. Central Time, 4:30 Eastern Time. So any of you early morning traders out there, that will be the time to be watching the British pound. That will be when you should expect the pound to be moving. And what is that number? What is the public sector net borrowing number? It basically is a simple measurement where it measures the difference in value between spending and income for basically public companies, the central government as a whole, and local governments during the previous month. So how much did it change? Did it go up? Did it go down? All right. So if the number is going up, then there's a budget deficit. If it's a negative number, it includes a budget surplus. So obviously, actual number less than the forecast, meaning surplus, is, good. So negative number is a positive thing on this. Anyway, so you'll see that come out. And if you're trying to figure out how it works, just go back and look at when the previous reports came out. Like on the pound, it came out on September 21st, August 21st. So you go back and look at those dates. They come out at the same time. And see just how did the market react to the number coming out. And again, always check and see, was it better or worse than expected? Was it better or worse than the last number? And were any of the previous numbers revised on the report? And that comes out of the Office for National Statistics over in Britain, which again is statistics.gov.uk. All right, and you can go over there and you can get all their information and the release calendars and all the stuff that comes out. There's also a bunch of websites out there where you can get information. Now, if we go a little bit and checking out a couple other things. On the CAD there, we got the Canadian dollar, their core CPI. And on the core CPI, the change in the price of goods and services purchased by consumers. So that number's going to come out tomorrow morning, 7:30 Central Time. They'll have core CPI and CPI coming out. The big one to pay attention to, unless there's just a major off on the CPI number, the major one to pay attention to is the core CPI. That'll affect the U.S. Canadian. Usually has an impact on oil as well, since there's such a high energy effective state. And then we're going to roll over to 9 a.m. tomorrow to existing home sales. On existing home sales, they can be right here in the United States. And what were the numbers? And that's the annualized number of buildings that were sold during the previous month, and including new construction, etc., things like that. So anyways, just to get you some different ideas and things that are going on, but always know when that news is coming out. 1, you can trade around it. 2, you can be aware of it. And in diagnostic trading, I'm always talking about to be aware of where other traders are placing their trades and when they're placing their trades as well. And stay right there, folks. We'll be right back after this commercial break, and we'll do a wrap up for you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour here. I am your host, Darrell Martin, and we're just going through some things, looking at Google. It's like they've allowed a few other orders to slip through, but overall, it should not be opening back up at all until after market close. So it's going to be pretty interesting. There basically is a story that says that the printer let it leak early or whatever. We'll see. But so there's going to be some. I know there's some upset people right now. There's some happy people and there's some very unhappy people. And anyways, got to trade with protection at all times. So let's go ahead, and I do have the diagnostic deviation numbers posted up there for you to review if you want to check those out right now if you're inside the Tiger Den, or if you're over on Tiger TV. You can see those numbers right now. But go ahead and I'll do a market wrap for you, then we'll wrap up looking at a few of the markets. We got the S&P is currently down 6.5. We got the NASDAQ down 39.5. We got the Russell down 5, and we got the Dow is down 17 points right now. We got that trade that we put on earlier. You can see here we got in on the Dow, and went short on that, just as sort of a educational and fun trade all at the same time. It's doing pretty well. It's up a few $100s right now. And so that one's going in. And let's see what else we got going on. We got we got copper. Still pretty flat on the day, starting to move down a little bit. Silver down over 1% on the day. We got gold down $8.50. And we got corn is now just up just about 2%. We got soybeans up over 2%, 32 points on the day. We got oil still looking pretty flat when you compare it to yesterday's close, which is amazing with everything that's been happening. But it definitely did have a big move on down there. It moved on down to 91.12, and we had a deviation level down here at 0.7, 91.21. So it basically broke that level at that 0.7. A lot of things hit the 0.7 levels today and bounced off of them. And looking on over what else we got going on the currencies here. We got euro dollar. It is down 36 cents. Pound dollar finally started to wake up and is moving 25 pips down right now. No longer flat on the day. Aussie dollar is down 5 pips on the day. So dollar is gaining strength. U.S. yen is up 17. U.S. franc is up 10. U.S. Canadian is up 36 pips right now. It's like on the day. So that is our market wrap. And we got the fundamentals covered. We're looking over at the deviations. We got a few more minutes here left on the hour, so let's go ahead and check out where the markets are sitting in comparison to their deviation levels. All right, so I'm going to go ahead and maximize this one, and we'll go through and look at them. I'm going to pull the deviation levels off and throw the charts up. So pull this one off right here and put this one up. Yeah, there's a lot of companies being nailed right now because of all that mess going on over there. So, again, we did go short on the Dow. We'll see if that continues. We chose the 3,100 to 3,500, 415 Wall Street 30 spread. And let's see here. So, going ahead and checking things out. That's just the one I saw that I liked, and so that's the one I went for. And I like the spreads on Wall Street 30 better than I do the U.S. Tech 100 NASDAQ spreads. I like the NASDAQ 100 binaries, but as far as the spreads, I like the Wall Street 30 better than the NASDAQ ones. And, it looks like I do have a question right here. See if I can read this up real quick. Let's see, put an order in, and my price in the contract was this. What I can't figure out is why it isn't tracking with the Forex info, but it is currently showing this certain price in the market. Okay, so basically what he's asking is, why isn't the spread the exact same as the underlying market's price? So, all right, so that's a great question. Let's go ahead and we'll just roll on over. We'll pick that one up. So if you have any questions, you can call in. You can email me, dmartin@tfnn.com. This question comes from Mark Kavanaugh. And so what I want to do is wrap this up and show how this one works right here. And so we'll get rid of this. We'll close this out of the way. And we'll look at our Forex spreads. And on our Forex spreads, what you're going to notice, and this is a really short and simple answer, okay, is open up any one of the spreads. You'll actually see the underlying price right there, and it's a little bit off. That's because of the time value built into the spread. Okay, and where it's at in relation to the floor and the ceiling. And I'll go into that in more detail on tomorrow's show. All right? So everybody have a great day, a safe day, a great evening, and I will see you tomorrow, 12 to 1 Central, 1 to 2 Eastern Time here on TFNN.com.